Tax debt can be a significant financial burden, and if you owe back taxes to the government, it can be hard to know where to turn. Fortunately, there are tax debt relief programs available that can help you get out from under your tax debt and avoid penalties and other consequences. In this video, we'll explore what tax debt relief programs are, how they work, and the benefits and drawbacks of using them. First, let's start with what tax debt relief programs are. These are programs offered by the government and other organizations that can help you settle your tax debt. The goal of these programs is to help taxpayers who are struggling to pay their taxes and avoid the negative consequences of unpaid tax debt. Now, let's talk about how tax debt relief programs work. There are several different types of programs available, each with their own requirements and benefits. Here are a few of the most common types of tax debt relief programs. 1. Offering compromise. This program allows taxpayers to settle their tax debt for less than the full amount owed. To qualify for an offering compromise, you must demonstrate that you're unable to pay your full tax debt and that settling for a lesser amount is in the best interest of both you and the government. 2. Installment agreements. This program allows taxpayers to pay their tax debt over time in monthly installments. This can be a good option if you're unable to pay your full tax debt up front but can afford to make regular payments over time. 3. Currently not collectible. This program allows taxpayers to delay paying their tax debt if they're unable to pay due to financial hardship. The government will temporarily stop collection activity until the taxpayer's financial situation improves. For penalty abatement, this program allows taxpayers to have penalties and interest waived or reduced on their tax debt. To qualify, you must demonstrate that your failure to pay was due to circumstances beyond your control, such as a serious illness or natural disaster. Each of these programs has its own requirements and benefits, so it's important to carefully evaluate your options before deciding which program is right for you. Now, let's discuss the benefits and drawbacks of using a tax debt relief program. The main benefit of using a tax debt relief program is that it can help you settle your tax debt and avoid the negative consequences of unpaid tax debt. These consequences can include wage garnishment, property liens, and other collection actions by the government. Using a tax debt relief program can also help you avoid additional penalties and interest on your tax debt. These can add up quickly, making it even harder to pay off your tax debt. However, there are also drawbacks to using a tax debt relief program. For one, you may not qualify for certain programs based on your income, assets, or other factors. Additionally, some programs may require you to pay a fee or hire a tax professional to help you navigate the process. It's also important to note that using a tax debt relief program may have a negative impact on your credit score. This is because the government may report your tax debt as settled rather than paid in full. However, the impact on your credit score is typically less severe than if you were to have unpaid tax debt or a property lien. In conclusion, tax debt relief programs can be a helpful option for those struggling with tax debt. These programs can help you settle your tax debt and avoid the negative consequences of unpaid tax debt. However, it's important to carefully consider the benefits and drawbacks of using a tax debt relief program before making a decision. With the right program and the right guidance, you can achieve tax debt relief and a brighter financial future. Debt consolidation versus debt settlement. Pros and cons. When it comes to managing debt, there are two popular options available to those struggling with multiple debts: debt consolidation and debt settlement. Both of these options can help you manage your debts and potentially reduce your overall debt burden. However, they work in different ways, and it's important to understand the pros and cons of each before deciding which one is right for you. In this video, we'll explore the differences between debt consolidation and debt settlement, as well as the pros and cons of each option. First, let's start with debt consolidation. Debt consolidation is the process of taking out a single loan to pay off multiple debts. This means that instead of making multiple payments to different creditors each month, you only have to make one payment to your debt consolidation lender. The main benefit of debt consolidation is that it can simplify your finances and reduce your overall debt. By consolidating your debt, you can potentially lower your interest rates and monthly payments. This can help you save money in the long run and reduce your overall debt faster. However, there are also drawbacks to using debt consolidation. For one, you may not qualify for a loan that has a lower interest rate than your existing debts. This means that you may not save as much money as you hoped by consolidating your debt. Additionally, if you're not careful, debt consolidation can lead to even more debt. If you don't change your spending habits and continue to use credit cards or take on additional loans, you may end up with more debt than you started with. Now, let's talk about debt settlement. Debt settlement is the process of negotiating with creditors to settle your debts for less than the full amount owed. This means that you pay a lump sum to the creditor, and they forgive the remaining debt. The main benefit of debt settlement is that it can help you get out of debt faster and potentially reduce your overall debt burden. However, debt settlement typically involves negotiating with creditors and may require the assistance of a debt settlement company or attorney. This can be a lengthy and expensive process. Additionally, debt settlement can have a negative impact on your credit score. This is because settling your debts for less than the full amount owed can be seen as a negative by creditors and lenders. Now that we've discussed the basics of debt consolidation and debt settlement, let's compare the two options and their respective pros and cons. Pros of debt consolidation. 1. Simplifies your finances by combining multiple debts into a single loan. 2. Potentially lowers your interest rates and monthly payments. 3. Can help you save money in the long run and reduce your overall debt faster. Cons of debt consolidation. 1. May not qualify for a loan that has a lower interest rate than your existing debts. 2. If you don't change your spending habits, you may end up with more debt than you started with. 3. May not be the best option for those with high levels of debt or poor credit. Pros of debt settlement. 1. Can help you get out of debt faster and potentially reduce your overall debt burden. 2. May be a good option for those with high levels of debt or poor credit. 3. Can be negotiated with creditors or through a debt settlement company or attorney. Cons of debt settlement. 1. Typically involves negotiating with creditors and may require the assistance of a debt settlement company or attorney. 2. Can have a negative impact on your credit score. 3. May not be successful in settling all of your debts. In conclusion, both debt consolidation and debt settlement can be helpful options for managing debt. Debt consolidation can simplify your finances and potentially reduce your overall debt burden, while debt settlement can help you get out of debt faster and potentially reduce your overall debt burden. It's important to carefully consider the pros and cons of each option before deciding which one is right for you. Debt consolidation may be a good option if you're looking to simplify your finances and potentially lower your interest rates and monthly payments. However, it may not be the best option for those with high levels of debt or poor credit. Debt settlement may be a good option if you're struggling with high levels of debt and want to get out of debt faster. However, it can have a negative impact on your credit score, and it typically involves negotiating with creditors or hiring a debt settlement company or attorney. In the end, the best option for you will depend on your individual financial situation and goals. It's important to carefully evaluate your options and make a plan to pay off your debts as quickly as possible. This may involve a combination of debt consolidation, debt settlement, and other financial strategies. If you're struggling with debt and need help, consider working with a financial advisor or credit counselor. They can help you evaluate your options and create a plan to achieve financial freedom and a brighter future. With the right guidance and a commitment to paying off your debt, you can achieve a debt-free life and a stronger financial foundation.